Now, Guardian's got this rule about in the first year, about first 60 days, you got to get in that set amount of money that you're wanting to pay into the policy. And I think agents often get confused about this rule. And this is, again, more technical. This is for the agents at this
The
point.
unscheduled PUA MEC rule. And yeah.
Yeah, help me understand that, because
Yeah.
I've got a policy where it's set up to pay 70,000 a year.
Yeah. Mm-hmm.
And in my first year, although I did that number day one, I could have spread that number out throughout
Yeah.
the year without obligating myself to 70. And so my
Correct.
minimum amount was 9,000. So
Mm-hmm.
what ended up actually getting, I actually got a bill to pay 9,000 day one of the policy, and then I was able to dump the other 61 at leisure. In my case, I did it kind of both at the same time.
Mm-hmm.
But to have that flexibility is huge, where you're like, okay, I'm able to get all of the benefits as if I was doing it all at once,
Yeah.
but not be obligated to it. But then there's
Yeah.
this rule with Guardian about this whole unscheduled PUAs and scheduled PUAs 60-day
Yeah.
rule.
So that rule is actually with all companies. It's a MEC rule, so it's an IRS rule, not so much the insurance company. So
Okay.
yeah, so the simple answer is if you've got a 1-year term rider where your death benefit doesn't increase, whether you add the extra PUAs or not, like if you just paid 9 or if you paid 70, your net death benefit in year one,
They
no
say.
different. It's no different from when you started either.
Correct.
So that whole 60-day rule is you don't have to worry about it at all. What it's referring to is with a life insurance policy, if I started a policy with no term rider, say the death benefit's $1 million, my MEC limit might be 30 grand. Now, if I dump in $10,000 into PUAs, yes, it's going to give me cash value, but it's also going to push my death benefit up. Let's call it $1,030,000 or $1,030,000 now, which if my death benefit increases, my MEC limit is going to go up a little bit. So if it was 30K with a $1 million death benefit, now it's 31K, right? With $1,030,000 from adding those PUAs. So adding PUAs to a policy without a 1-year term rider will push the whole life death benefit up. Like when you see a classic whole life insurance illustration with the increasing death benefit. The higher the death benefit is, the higher the MEC limit is. So what Guardian shows in their software, a couple other companies do it too, but they'll show, okay, when you add PUAs, death benefit goes up, and the software will show the MEC limit that matches that death benefit, including the PUA payment. However, the IRS rules with the MEC rules stipulate that during the first 60 days, you've got to add those PUAs to have the MEC limit based on the death benefit figure you see in that illustration. To simplify, $1 million death benefit gives you 30 grand in MEC space. If you add $30,000 up front on day one, that might push your death benefit up to $1.1 million, which now your MEC limit is 33,000 or whatever.
Higher, yeah.
And then now it's 33K per year. However, if day one, you start with a $1 million death benefit, 30K MEC limit, you just pay the minimum, and then 61 days later, you throw in 30K or up to 30K, you fund it up to the MEC limit, the death benefit is pushed up to 1.1, but the MEC limit's still at 30K.
Okay.
Because, so if I add it in the first 60 days, then the MEC limit is going to be based on what that death benefit is during the first 60 days. Whereas if I add the PUAs after the first 60 days, the death benefit still goes up, but the MEC limit doesn't go up with it because I've passed that 60-day window. It's somewhat meaningless when you're using that 1-year term rider because your death benefit won't increase at all ever for as long as the 1-year term rider is attached, because you're inflating it with the term rider from the get-go. You're building in the future increase from day one. So the whole 60-day rule is at the window. But that's what that's referring to. Yeah, I hope that makes sense.